Ms. Jouvari.
Chair now recognizes the gentlewoman from Indiana, Ms. Houchin, for 5 minutes.
Thank you, Madam Chair, and thank you to Ranking Member Sherman. Thanks to the witnesses for being here today. Under Chair Gensler, we've seen the SEC move at an unprecedented pace to propose and then finalize politicized rulemakings that hurt our markets, discourage growth, and do nothing to help those who are trying to save for retirement and better their lives. From proposals like those on swing pricing, predictive data analytics that cut off tools and opportunities for everyday investors, to the recently finalized rule on climate disclosures that goes well beyond the Commission's statutory authority and pushes a Green New Deal agenda. The SEC under this administration has shown time and again that it is committed to pursuing ideological goals at the expense of ordinary Americans. In my view, and many that serve on this committee, that has to change. With the number of wide-ranging effects that we've seen from the Commission under Chair Gensler, one of my foremost concerns is the way that the cumulative effect of this will change the way our U.S. capital markets work. This issue goes well beyond just the SEC. We've also seen financial regulators become increasingly interested in implementing the initiatives of international organizations between Basel III, the new environmental accounting standards coming out of the UN, and the EU's Corporate Sustainability Directive. I'm concerned we don't fully understand yet the potential consequences that all of these rules will have on our markets. Mr. Gulliver, I'd like to ask you, what do you see are the potential consequences of implementing international policies without input from our market participants and stakeholders?
I think there's a real risk that the policies that would be implemented in the U.S. wouldn't be in the United States' best interest. Our financial institutions and market participants have unique perspectives, and those need to be incorporated in rules here.
Thank you. There's little need for us to take directives from outside the United States, especially as other proposals from our federal regulators are threatening to change the ways that our markets currently operate. A few weeks ago, the House voted to pass Chairman McHenry's H.R. 2799, the Expanding Access to Capital Act of 2023. As a member of the Rules Committee, I was proud to manage the floor debate on the rule that provided for its passage. It also included my legislation, the Regulation A+ Improvement Act, as part of the bill. Together, these proposals would strengthen our public markets and expand opportunities for small and mid-sized businesses to raise capital and create new investment opportunities for everyday Americans. The committee, this committee, understands just how important capital formation is to creating new jobs and achieving economic growth. That's why I've been so upset at the SEC's direction under Chair Gensler that they've neglected their statutory obligation and prioritized other items like ideologically driven climate reporting mandates and crackdowns on investment advisors' use of basic technology over its obligation to promote capital formation. Mr. Burton, are there better ways for the SEC to spend its limited resources rather than this hyper-focus on achieving their partisan objectives?
Yes, and I go into quite a bit of detail in my written statement, but the core function of the SEC is extraordinarily important to our capital markets, to the success of our economy, and the standard of living in this country. And it needs to focus on that instead of pursuing these ideological and political objectives that are simply not related to the core mission of the SEC. And it's about to get worse. If you look at the regulatory pipeline that they filed with OIRA, it's full of politically motivated rules. So the core point is, but also the fact that the agency is so badly run, they waste so much money on things that are, it's not ideological, it's just incompetence. And they need to work on that as well. I mean, there's one manager for every non-supervisory employee at the SEC, for example. I mean, it's just bureaucratic and ineffective.
Inefficient. Instead of prioritizing its congressionally directed mission, they seem to be focused on squashing opportunities for growth, adding more red tape for average investors, without any concern for the effects of all of this cumulative rulemaking and what that will do to the financial market. They also seem to be, as you stated, acting not only inefficiently, but maybe incompetently on some of these fronts. And looking at things that if I were a business owner seeking investments from other individuals, I would want to look at the bottom line and not the climate effect necessarily of what we've got going on. I appreciate the witness's testimony today, and I yield back to the chairman.